Ladies and gentlemen, welcome back to Vietnam Stock Market Opportunities. I'm very happy to be with you today. And if you want to open a legal trading account, please contact us with the email Vietnamstockmarket.entry@gmail.com, Telegram Vietnamstockmarket.entry, with the phone number is +8491 432 6556. Or you can also scan the 2 QR code on the screen so that we can support you. And the other way to contact with us is follow and subscribe the channel name Areca Capital Channel. The owner of this channel is Areca Hồng Nguyen. She is a personal financial advisor. You can contact her with the email home.nguyen@vcsc.com.vn with the phone number is +8491 432 6556. We always welcome you to our office on the 11th floor, 109 Trinh Đạo Street, Hoàng Diệm District, Hà Nội, Vietnam. And the purpose of this video is to update you about VPB, Vietnam Prosperity Joint Stock Commercial Bank. Is a Vietnam-based commercial bank with one fully owned subsidiary, Asset Management Company, VP Bank, AMC, and 50% ownership of Consumer Finance Company, FE Credit, FEC. FEC contributed around 21% to the consolidated loan book in 2021. On the screen, this is the report which was collected by Viet Capital Securities about VP Bank on the 20 October 2022, with the current price is 15,950 Vietnam dong. Target price 30,000 Vietnam dong. Upside more than 88.1%. Dividend yield 0%. TSR more than 88.1%. Rating buy. Results in line with our expectation. FEC picks up. VPB released its consolidated results for 9 months 2022 with PBT of 19.8 trillion Vietnam dong, $810 million, more than 69% year-over-year, which achieved 75% of our full year 2022. If we exclude the abnormal income from AIA's bancassurance supporting fee of around 5.5 trillion Vietnam dong recorded in Q1 2022, consolidated business as usual. PBT in 9 months 2022 completed around 69% of our full year forecast, which implies Q3 2022 PBT of 4.5 trillion Vietnam dong, more than 7% compares to Q2 2022. We see no major changes to our 2022 forward earnings forecast, pending a fuller review. 9 months 2022 consolidated net interest income increased 19% year-over-year, achieving 73% of our full year 2022 forecast, with consolidated net interest margin of 7.77%, less than 44 basis points year-over-year, compares to our 2022 forward net interest margin of 7.39%. 9 months 2022 consolidated loan growth was 13.3%, which was derived from 1. 14.7% loan growth at the parent bank, and 2. 8.2% loan growth at VPB's subsidiaries, including FEC and VP Bank Securities. 9 months 2022 parent bank credit growth was 15.4%. As of Q3 2022, the corporate bond balance at the parent bank increased 19% compared to 2021 to 33 trillion Vietnam dong, 1.3 billion US dollar. However, it decreased 11% compared to Q2 2022. The loan growth of FEC picked up in Q3 2022, as its 9-month 2022 loan growth was around 3.4%, according to our estimation. Meanwhile, FEC's loan book as of Q2 2022 was relatively flat compared to 2021. 9 months 2022 consolidated annualized write-offs to gross loan was 4.13%, less than 87 basis points year-over-year, compared to our forecast for 2022 forward of 3.90%. 9 months 2022 annualized write-offs to gross loans at the parent bank were 2.38%, more than 23 basis points year-over-year. 9 months 2022 consolidated recovery income from written-off debts was 2.9 billion Vietnam dong, 119 million US dollar, more than 8.4% year-over-year, which was mainly propelled by a strong recovery of income at the parent bank, more than 64% year-over-year. 9 months 2022 CIR trended down 1.3 PPTs year-over-year to 22.3%. If we exclude the abnormal income from the bank insurance supporting fee, 9 months 2022 CIR would be around 25.4%, which is still among the lowest in our banking coverage. Credit growth was restrained in Q3 2022 due to later than expected granting of credit holder top-up. We recall that 6 months 2022 parent bank credit growth was 14.3% compared to an initial credit holder of 15%. In 9 months 2022, the parent bank's credit growth was 15.4% compared to the current credit holder of 30%. As holder top-ups were granted for banks in September and early October, the amount of new loans disbursed in Q3 2022 was much lower compared to H1 2022. According to the bank's disclosure, loans to customers at FEC, SME loans and retail loans accounted for 70% of its consolidated credit balance. We believe the bank's retail-driven strategy helped VPB in approving its IEA yield and net interest income growth despite there being restrained credit growth in Q3 2022. In addition, VPB was one of the 3 banks in our coverage, along with TCB and TPB, that have thus far reported a Q-of-Q decrease in corporate bonds in Q3 2022. VPB's corporate bonds decreased 11% Q-of-Q and accounted for 8% of its consolidated total credit exposure as of Q3 2022. Consolidated net interest margin decreased on a Q-of-Q basis. Q3 2022 consolidated net interest margin was 7.45%, which decreased 20 basis point year-over-year due to a 30 basis point year-over-year increase in COF that outweighed an 8 basis point year-over-year increase in the AER, IEA yield. We note that VPB has the highest 6 months 2022 deposit growth in our coverage at 23.3%. However, customer deposits at the parent bank dropped 6.2% year-over-year to 276.6 trillion Vietnam dong as of Q3 2022. As the credit code top-up was granted later than the bank's expectation, we believe the Q-of-Q drop in customer deposits was within the bank's strategy to control its funding. From our observation, VPB has increased its deposit rates by 1 to 1.3 ppts across all the tenors to attract customer deposits in late September. Provision expenses completed 78% of our full year forecast and tracked slightly ahead of our expectation. Consolidated provision expenses in 9 months 2022 were 15.1 trillion Vietnam dong, more than 11% year-over-year, which were driven by one, a 21% year-over-year increase in provision expenses at the parent bank, and two, a 6% year-over-year increase in provision expenses at FEC. On a quarterly basis, VPB's NPL ratio improved while its Group 2 loans level surged. VPB's consolidated NPL ratio in Q3 2022 dropped 23 basis points Q-of-Q thanks to 1. A 19 basis point Q-of-Q decrease in the NPL ratio at the parent bank, and 2. A 61 PB Q-of-Q decrease in the NPL ratio at FEC. Despite the improvement in the NPL ratio, consolidated Group 2 loans level surged 81 basis points year-over-year in Q3 2022, which we believe could credit upward pressure on VPB's credit cost in the future, pending a fuller review. Figure 1. VPB's consolidated 9 months 2022 results. And Figure 2. VPB's standalone 9 months 2022 results. And that's bring me to the end of my presentation about the topic today. Hope this video and some information will be useful for you. And if you want to open a legal trading account, please contact us with the email on the email and some information on the screen so that we can assist you. Thank you for your listening and see you next time.